Hey, we're with you for another week here on the Duncan Duo Real Estate Show, talking about the Tampa Bay real estate market like we are every Sunday when we aren't on air. Make sure to follow us at the Duncan Duo, Twitter, Instagram, YouTube, TikTok, Facebook, every social media platform. We're always putting out relevant real estate information and stuff going on in the market, whether it's up, whether it's down, where prices are, where sales are, where interest rates are. And that is what we're going to talk about a little bit today with Melissa Rodriguez. Melissa is joining us for the first time on the show. She's been a preferred loan officer in my business for a while, and just became the branch manager at Citywide Home Mortgage, which I know you're really excited about. We're excited to have her. She's done a great job. They're our exclusive lender on our real estate team. And Melissa, it's interesting because how the connection started was my girlfriend, who works for a new construction home builder, prior to that was working for a real estate team, because we just decided, like, we're not going to work. We'll be in the same industry, but we're not going to commingle that.
Right.
We're not going to be in the same business together. And so she had told me, she's like, there's this loan officer that I really like. She's really good. And one of the things I love about Jess is that she can read through people's BS. She is really good at pointing out good people.
Right.
She has an instant character bond, and she's a good person, And so that's how it started. And you've done a good job as an LO, and then I got the introduction to you, and then we had talked couple of times, and so now here we are today, and we've got this opportunity with Citywide Home Mortgage, where who's owned by Guaranteed Rate, has an incredible platform, and you're the branch manager, which is operating out of my building, and it just kind of all came together, right? It was a great synergy, and my team loves you. They're definitely bought in. They're driving stuff to you, and super competitive on rates and fees, which I think is really valuable. But let's talk about mortgage rates, because I think there's a lot of misconception out there, right? People think, oh, the Fed rate's going to come down and then rates are just going to pile downward.
Right.
It doesn't happen like that.
So first and foremost, thank you so much for having me on. I'm excited to be here. So exactly like you said, it's great to stay in touch with the Fed rates and watch Jerome Powell, his talks. He's going to be on in September, but that doesn't mean that the mortgage rates are going to come down.
Right. It's a pendulum. So for example, he may announce there's a 25 basis point cut, but most of the market is already predicting that will happen, and it's already pricing it in, right?
Right.
Rates have already softened to the point where most of that 25 basis point for mortgage rates, because what the Fed rate really is, it's more the short-term thing. The Treasury yields and bonds are what really dictate mortgages.
Right.
And there is a trickle effect where, if we continue down this path of lowering the Fed rate, where eventually you would expect that it should, for all intents and purposes, pull down mortgage rates, but it's not a guaranteed lock. It's not a guarantee. So where it will immediately affect you is probably credit cards,
right,
lines of credit, those fluctuating things. It'll pretty instantly hit there, but certainly some of it gets priced in now. If he did a 50 basis point cut, because that's not expected, then you might see some really quick drop in rates because the market wasn't expecting that.
Correct. It's just a good way to see how the market is doing, how it's trending, and you would assume, like you said, that the mortgage rates should follow. Yeah,
and I think a lot of people, that watch it don't quite understand that. And what we have seen, long-term mortgage rates have hit a 10-month low, hovering in the mid-sixes, kind of back and forth, and they do fluctuate. And I want you to talk on that for a second, because I think that's one of the really nice parts about being in a broker model, which is what we have with Citywide, is that you have the ability to kind of forecast and see what's going on with rates to help educate people on whether they should or shouldn't lock, depending on what's happening economically that day. Right? There's people all the time where they're like, oh, and you're like, oh, maybe we should wait till tomorrow, because that them locking that rate a day or two different before or after could mean a substantial difference in their interest rate.
Correct. Up or down.
Yeah, up or down.
Yeah, we really have to just watch it and communicate with our clients and just educate them on how the market's doing, how the rates are looking.
And I think that that's one thing that I think, again, the other thing about the broker model that I really like, which is why I was an advocate for it in my business, is no different than insurance, mortgage, a real estate brokerage. You're when you're not only offering a small segment of products, right? You guys have an array of products, like thousands of different products available depending on down payment opportunity, whether it's FHA, VA, conventional, whether it's USDA, right? Which is one of the unsung heroes. Not a lot of people know about in our market because it's a no money down mortgage. Right. You can, there are still no money down VA and USDA, that are some of the best mortgages out there simply because the rates are still super competitive, but you don't have to come out of pocket.
Right. We have options, definitely some amazing options to offer our first-time home buyers, repeat buyers. We're nationwide, so we just have so many avenues that we can.
Yeah, and that's the other thing, like, because we are a company that moves people, right? Like, so we'll have someone that's selling here and buying somewhere else, and I think they're so used to like their mortgage lender being like they can only help me locally. While you are local, we can help. They're selling in Tampa and they're going to buy in Arizona. We can help them on the mortgage,
right.
Going out to Arizona, right? And so there's a lot less limitations on that. Other products like jumbo. Right, jumbo is something that's common in our marketplace. That's available. There's different construction products. There's doctor loans. There's bank statement loans for people. Like I have a personal friend that did a loan with you last year that was basically a bank. It was an asset loan. You didn't have to go through as many hoops to jump through because he was pretty solid, right?
No tax returns, no pay stubs, just strictly bank statements.
Yep, and so that can definitely happen. A lot of creative things. I think one other thing on the mortgage piece that some people miss. One is down payment. There's this myth out there, a misconception that you have to have 20% down. And while there's a lot of financial advisors, and if you're a Dave Ramsey guy, he's one of those guys that's, and look, I grew up kind of loving Dave Ramsey, and then I got to a point where I was like, well, this doesn't make sense. So a lot of his stuff does, some of it doesn't. But there's this belief that you got to have 20% down, and it's just not reality.
No, I was just having that conversation with a client yesterday, and they were like, well, we have 20% down. I'm like, well, do you want to put 20% down? Because if you're even for conventional, first-time home buyer is 3% down minimum for conventional, and repeat is a minimum of 5%.
Right. So it's like you have the ability to take that cash and do something else with it, or invest in the property, or do whatever. And again, is it, should some people put 20% down? I mean, it's a personal choice. There are people that are just, it's ingrained in them and they feel like that's what they need to do. But there are plenty of options out there. And we talked about the no down payment loans, which are VA and USDA. FHA is 3.5%. And there's even conventional now that's competing with that. Yeah, 3% conventional.
For primary resident.
Right.
First-time home buyers.
Right. Mm-hmm. And so there's all these products that are available. And, one of my favorite loans, and look, I'm a son of a veteran. My brother's a veteran. Like I'm an American patriot, go Army, kind of guy. And so my, one of my favorite loans is the VA loan. And I think that, and I'm sure you've probably experienced this too, the VA loan's an incredible loan product. Not only is it no money down and, you can lump in all the costs. It is an incredible loan product.
Right. And I love that too. And just being right there by MacDill Air Force Base. I love helping the veterans. Like you said, it's no money down. A lot of them are disabled. They don't pay property taxes.
Yep.
So we can help them with all of that.
Yeah. And I think that's one of my favorite loan products. And you know what? There's a stigma. And it frustrates me sometimes because there's a lot of real estate agents that group in the VA with FHA. Right. Like, oh, if it's VA or FHA, we don't because sometimes the condition requirements can be a little bit challenging, probably more so for FHA. But one of the unsung heroes for VA loans is an easier ability to handle appraisal disputes. Like, for example, if a property doesn't appraise, correct, you have the ability to go back and forth instead of it just being like, oh, it didn't appraise, right? And so I really love the VA loan product for that. And I think in general, whenever I've been a listing agent and I've got multiple people and it's really close and there's somebody that's VA, I'm actually leaning towards the VA person in terms of my recommendation or in a property that I own, simply because I like that extra ability to overcome that obstacle on appraisal. But I also just think it's the right thing to do. Like, somebody fought for our country.
Right.
They're
Let's help them
they
out.
sacrifice, like, let's go here. But I'm sure you've dealt with this before when you've qualified somebody on a VA loan, and then the client's having a hard time getting offers accepted because real estate agents aren't educated on the pros and cons of the loans. They just group the government loans in.
And they're just so scared. They're scared that they're going to tear apart the appraisal or the property, and it's not like that at all.
No, not at all. And so, again, Melissa has done a ton of VA loans. We are literally right outside the gates of McNeil Air Force Base. So if you're listening, if you're on base, if you're a soldier, if you're a veteran, if you're a contractor, contractors typically, most military contractors were in prior to becoming a contractor. And then some of those also still do qualify for VA. But so again, you can stop by our office, 6320 South Del Mabry. Literally, you drive by. If you go on base and use Del Mabry, you're going by my office twice a day. So stop by. You can certainly get some help with qualifying with different loan products that are available. And the one last thing I'll get to before break is that now we have the Hometown Heroes program is back in a small way. Kind of touch on that a little bit, on what the Hometown Heroes is, who can qualify, and what that means.
Okay, so it has changed a little bit this year. Last year it was open to all full-time Florida employees. This year it's changed. So now it's true heroes.
People that work for the government.
Correct. Medical,
police. It's police.
Court officials.
Court officials.
Right. Medical. And so teachers,
Yep.
The veterans can even do a hometown hero as well. But so it's 5% of the loan amount, up to $35,000.
Yep. Which is pretty awesome. And that gets basically, that reduces their out of pocket by getting a grant. Is that how it works? Is it? Remind me again, because I'm not sure of the specifics on it.
So it does have to be paid back if you sell or refinance the house, but there's no interest collected. There's no monthly mortgage payments.
Okay, that's awesome. So it's basically just like a interest-free,
correct,
interest-free loan to reduce down payment amount for somebody to be able to help them, qualify and technically lower their payment without having to come out of pocket the actual money.
Correct. So if you have, let's say, an FHA, that's 3.5% down. So you have the difference of the 5%. You could use it towards closing costs.
That's
as well.
pretty awesome. Yeah. And they did, like you said, they did restrict it down. They did make it so heroes, it's going to be, like she said, medical, military, police, teachers, firefighters,
correct,
paramedics, military. That's kind of the group of people. Think of, kind of public servants, people that are, kind of going above and beyond to help. So that's not to say that there aren't people out there in other industries that are heroes, but Governor DeSantis and the state of Florida decided to kind of round this out and say these are our heroes. So, we're going to be back. We're going to continue this conversation with Melissa. We're going to give you her contact information real quick. Melissa, what's your best cell phone number? If someone's they can call or text you pretty much anytime. You're super responsive.
So cell phone number is 813-735-9395. Again, 813-735-9395.
Super easy to remember, and we'll repeat that again a couple times in the show, but you can call or text her. That's one thing. I had Grant, our commercial agent, on. One of the most frustrating things I think people have is when mortgage lenders, and I hear it a lot in commercial real estate, they don't answer the phone. Melissa will answer her phone.
Oh,
so
for sure.
We'll be back after a quick break here on the Duncan Duo Show. So we're back here on the Duncan Duo Show talking about the Tampa Bay real estate market. Melissa Rodriguez with Citywide Home Mortgage, located in my building in South Tampa, is our resident mortgage expert. She's going to come on the show every month. She's been a mortgage partner of my company and a great loan officer. We're excited about her being the branch manager in a branch that's operating out of my building. And we talked in the last segment. Again, this is Andrew Duncan, the Duncan Duo Show, LPT Realty. We talked in the last segment about mortgage rates, different loan products, and there's been a big push in Florida and in Texas specifically about the potential abolishment of property taxes. And now I don't know if it will end up truly happening, like completely abolish all of them, but there is definitely going to be some relief. There is going to be, DeSantis has already said it, there is going to be something during the next cycle of elections where it needs, I think, a supermajority. I think 60% of Florida voters have to approve it. And it's going to be some sort of abolishment. Now, probably not abolishment in its entirety. Maybe abolishment for homestead, maybe abolishment for homestead up to a certain price. And as we've learned through the years, the real estate market ramps up and explodes when interest rates are low, right? But what people don't understand is it's not really the low interest rate that's loading up all those people. It's the payment.
Right.
And so if the interest rate didn't change that much, but the payment dropped to where it was when interest rates were really low, hypothetically, we would suspect that would probably explode our real estate market.
Well, and those property taxes, if we no longer have, or if they lower, then so many more people can get qualified.
Correct. And that's, when you look and you hear about the potential of 2 or 3 Fed rate cuts and the potential for abolishment of property taxes, it's why I'm such an advocate, because I think there is a really good chance of both of those things happening. Clearly, the Fed rate cuts are going to happen, and that'll lead to some mortgage relief, like we talked about in the first segment, not percentage point per percentage point, not an exact correlation, but definitely some relief in mortgage rates. So if mortgage rates relieve some and property taxes go away, that will put payments back in the similar place to where they were when we were at 3% interest rates and the market was going crazy. And I think there's a lot of buyers right now that are making the mistake of waiting and not acting now. And I think a year and 2 from now, they're going to really regret it, because then the market's going to be back to bidding wars. If our state abolishes property taxes, it will have a COVID-like effect, in my opinion.
Right.
Because during COVID, we had this huge surge of population and a huge surge of, that was probably the busiest you've ever been, busiest you've ever seen in your life, right?
Well, and honestly, yes, you're correct. But for personally, for me, if I would have waited, I live in South Tampa, and now I wouldn't be able to afford it, So I think every day that I bought when I bought.
Yeah, and I think there are so many people that are going to miss that mark, and then prices are going to skyrocket again. Like, they've softened. Prices have softened. Like, when I look at the statistics, our prices today are lower than they were 2 and 3 years ago, our average prices. And that's not even factoring in inflation and higher rates, right? So it's prices have softened. They probably will soften a little bit more, I think, this year. But I think there is a huge opportunity that people that try and time the market and say, oh, I'm going to jump in then, but if you wait to jump in then, that's when everyone else is going to too.
Well,
it's
really,
why right now is such a good buying opportunity.
What are you really waiting for? A quarter?
Yeah. Quarter point, half point.
A point. Like,
you can change that in a refinance.
How much? Correct.
Yeah, and most of the lenders are really creative with the refinances, and so but if the abolishment of taxes happen, I believe we'll see pretty considerable appreciation. And the way I look at that is, now would be the time to acquire the assets. Now would be the time to buy. Now the time would be to buy extra investment properties, because if those two things happen, it's going to drive prices up. It's kind of like, if you ever trade stocks, and you know about information before it becomes public. And then when the information becomes public, the stock rallies. Right. It's like, you knew it was going to rally. It's like, you knew. It's like, I know the real estate market, if those things happen, it's going to rally. And I think all signs point to that. So there are consumers out there that I think are waiting. And I think there's even sellers that are staying in their house because they're like, well, I got a 3.5% interest rate, and I don't want to go out and pay 6 or 6.5. So I'm going to wait for it to come down. and they're selling to buy, and they're moving up. And if they're moving up, the premise is when those things happen, prices are going to rise. I was talking to a client last week, and he said, "Well, Andrew, I'll just wait for my 500 to go up to 600 because that's what I really want for my house." And I was like, "Well, you're buying a million, right? Like, what do you think is going to happen in the million? It's sitting in a vacuum. If prices rise on your 500,
It's going to go 1.5.
your million's going to go up to Your million's going to go up even more.
Right.
You're going to lose money." And so people just think in a vacuum. But I think that I think it'll motivate some sellers to move up. Either of those two things happen, I think it'll churn some activity, and I think it'll pull back population growth again. We'll have people moving from New York, California, and all those places, which is what we experience. And I mean, I'll say this, like, having been in this business for 20 years, man, I probably spent the first 15 years rarely ever seeing a California license plate. Like, I never saw a California license plate. Like, never. Now I see them. Like,
in
they're
New
moving.
York.
Yeah, New York too.
Pennsylvania.
Oh yeah, they're moving. They're moving, and I'm sure you've dealt with that too. You're getting apps from people that are moving from those other states that will increase exponentially if those two things happen.
Yeah, actually, I got a call yesterday. The gentleman is moving from Ohio. He works remotely, buying a primary condo here in Clearwater. So
yeah, that's
happening.
Awesome. Yeah, and I think, again, the population growth will continue, and I think there's a really good chance of the massive property tax relief, and of course, if that does happen, that will definitively move the market. And I gotta, statistically, if you look at the percentage of people that are either homeowners or involved in the real estate industry, it's not as much of a political issue. It's a I think people voting on that specifically are going to vote on their pocketbook. I can't see a lot of homeowners saying, "Yeah, I'd love to keep paying property taxes."
Right, exactly.
So I think when that ballot comes out, I think they're going to hit that 60%. I mean, look, if weed almost hit 60%, or I think it did actually, I don't know, but I think home ownership is probably going to hit it. So anyway, we'll be back. We're going to continue this conversation after a quick break here on the Duncan Duo Show. And all kind of out. So we're back here on the Duncan Duo Show talking about the Tampa Bay real estate market. Andrew Duncan with LPT Realty, Melissa Rodriguez with Citywide Home Mortgage. I'm going to try and remember the phone number. I'm kind of like Rain Man with numbers. 813-735
Yes,
9395.
That's it.
That's it. 813-735-9395. I'm crazy weird remembering like numbers. It's just I remember them. So again, you can call Melissa, text her if you've got mortgage questions. If you want a second opinion, I think there's so many people today that need second opinions. They'll go online and they'll get a quote and they'll not realize, oh, I got this great rate, but they're paying for it in points or costs. A second opinion is something I recommend to every single customer out there. It doesn't hurt your credit like you might think.
Absolutely.
It gets grouped in. How often does that happen where you do look at someone's stuff and you're like, I can crush this. Like I can beat this.
Probably 90% of
90% of the time.
Yes.
So 90% of our listeners right now, if you're getting a mortgage quote,
You have to.
you talk
get
to
a
Melissa
second
because she believes she can beat what you're getting. Like,
Right.
and that's the other benefit of a broker model because you have some flexibility in terms of different banks and products and your financial creativity to do different things to be able to find the right deal for someone.
And Andrew, and if I can't, I am completely transparent. If I cannot beat it, I'm going to say, listen, you're getting a great deal. You need to stick with
And
them.
that does happen too. We
Yeah.
had one recently where it was like they had some sort of credit union that was giving them
Correct.
some special thing that you couldn't, so it does happen, but it's rare because most of the time they're overpaying somewhere, whether in rate or costs. The other trick that I think is common in mortgage, and I'm sure you've seen this too, is that and I even said this in the team meeting, the very first house I bought, I was not in real estate. I was not real estate educated. I was doing something completely different. And I did this. You get your good faith estimate from the lenders, and I had two lenders, and I looked down, and I just looked bottom line. What's the payment over here? What's the payment? Payment's better over here. I'm going over here.
Right.
Where all they really did was basically put lower tax and insurance numbers that they don't have any control over, made it look better, when in reality, the principal and interest payment on that loan was worse than the other one, and the other one was just honest about taxes and insurance.
Actually, that literally just happened yesterday.
Yeah.
So we had a client that we had already pre-approved. Their realtor told him to check out their lender.
Mm-hmm.
They came over with a $12,000 cash to close. They ended up going with them. Well, when we found out, we said, hey, let us check it out. Well, once they signed the loan, disclosures, it went from $12,000 to $20,000.
Wow.
So it's
bait and switch.
Right.
Really common in the industry too. So again, get a second opinion. Again, call or text Melissa 813-735-9395. Call or text her. She can look at your, good faith estimate. But I think a lot of people make that mistake. And I think a lot of lenders, especially not local ones, will kind of juice that a little bit because let's say some lender in Connecticut is doing a loan in Florida and they don't know what our tax insurance are. And they're like, oh, this is what we do in Connecticut. We put 1,000 here and 1,000 here. And then the person's like, oh, this payment over here looks really good. But the principal and interest is higher because the other lender, you were being honest about taxes and insurance. So what you should compare, the only thing that you should compare when you're talking to mortgage lenders is the principal and interest payment. Don't look at what they're putting for taxes and insurance because they don't know. Or they're inaccurate. Like they don't know what your insurance is going to be. They don't know what your comfort level is with your deductible. They don't know how much content coverage you want.
Right.
Like they're throwing a number in there that is fantasy land.
Well, and I'll go into the tax collector's website. I'll show you the tax bill. I'll request a couple insurance quotes for you to help you understand exactly what your mortgage payment's going to be.
Yeah, 100%. Because people will pick a lender based on the wrong thing. So again, very common. Second opinion, you end up winning it because you show them and you break it down for them and you say, hey, look, here's where you're missing out.
Right.
So again, if you're going to get a mortgage and soon refinances, like we're not seeing a lot of them yet, but there's going to be a point where if the Fed does do these rate cuts where, at some point next year where people will start to look at doing refinances. And same thing, there's some predatory stuff that's happened on refinances before. It's like, oh yeah, we'll get you down to this rate. And then they
roll it in.
They roll a bunch of fees and costs in, and then they eat up your equity and you think, oh, I got this great payment. Yeah, but you gave away $30,000 of equity.
Correct.
So refinances. The other thing I think is interesting about refinances, even today, there are loan products that have streamlined refinances where it's literally you're just going to lower your payment. Like it doesn't. I think VA does that, right? Doesn't VA do a streamline?
FHA, yeah.
They do like a streamline where all they're really doing is, they're not coming out of pocket and they're just lowering their payment based on the rate.
Correct. So there's rate and term, which is literally only lowering your payment, or a cash out refinance.
Yep. So both of those things are available. Again, just having your back here, I would tell you that wait on that if you can, because rates are probably going to come down a little bit more. Like if you have to do a refinance right now, well, we can help, but we think there's a little bit more relief coming within a few months. So if you can make it happen to wait to do either a cash out or refinance, it may be a little bit better down the line, but I think next year is going to be an enormous refi market.
I'm excited about it.
Yeah, I think it's going to be an enormous refi market. So speaking of, kind of creative stories, one of the things that a lot of customers make the mistake of is changing jobs during the loan process. I have to tell you, like, we've had that happen so many times. Well, I didn't know. I thought I was qualified and I changed my job. And then they're going to call you. They're going to get a call. The employer is going to get called and they're going to say, oh, guess what? The pay stub, they're not here anymore. How many times has that blown up a loan?
Oh, God, I don't even want to count. It makes me sick.
Yeah, it's a lot, right? But someone can change jobs if they're staying like same industry, they have an offer letter. There are times where someone can and you can still creatively help get that loan closed.
The problem is when, yes, we can definitely help them. The problem is when you go from a W-2 employee to self-employed, then that will just destroy everything.
Because you need a couple years.
Correct.
You got to have a couple years of self-employed.
Yeah.
And unless someone's got a lot of assets or, so like you said, a bank, other businesses or their spouse can qualify. There are a lot of creative things that you can do. So those are things that happen. The other ones that happen, and I was almost guilty of this with my first house. I started doing really well, and I was working for a Fortune 500 company out of St. Pete, and I was under contract to buy my first house, and I got this big bonus.
Did you buy a car?
I almost did. I said, I'm going to go buy that new Mustang. I want that new Mustang. I want a 5-point. I want that thing. And so I was at the dealership. I got quotes. They ran credit. I looked at it, and I was going to think on it overnight. And I talked to my agent the next day, and they're like, hold up. Like, no. So how many times does that happen? Somebody goes out either
too many.
Furniture credit,
yes,
car.
furniture.
Furniture's a common one. And then it blows. Then it's like, well, guess what? You're putting that furniture in your apartment because you're not going to qualify now.
Oh, my gosh. It's and again, we just had it, but it was a DSCR loan. It was an investment loan, so everything worked out. But they do monitor your credit. Yeah. And if you get an inquiry, they're going to ask you about
what is this?
Well, this guy ended up going, of course, to go and buy new furniture, which, like I said, it was an investment home, so everything worked out fine. But why are you doing that?
I think the best advice I have for people is, your financial situation from the day that you qualify, your financial situation needs to kind of be unchanged.
Correct.
So all the job changes and any other debt that you take on, any other credit that you take on, you've got to pay your bills, right, during that time. And you've got to not incur new bills.
Correct.
So buying the new car, buying the appliances at Best Buy on credit, like even any large expenditures could hamper, like even if you didn't, but you put it on a credit card, now your credit card balance is a lot higher. It's like all of those things you should run through your mortgage person, or you should just do what you can to wait until you own the house and close, and then go do those things.
Correct. Sometimes it does work out, but just let me know.
Yeah.
Have full communication with your mortgage professional, and they can definitely help you out through those.
Yeah, but those are some of the mortgage horror stories that I've seen. We had one, and this was catastrophic. We had a husband and wife where they were qualified, and something happened medically to the husband.
Oh.
And he was alive but incapacitated. So there was debate about whether he was going to be able to work and could he be able to do this. And, it was a really sad story, but there's always these, crazy curveballs in the mortgage world. And what's interesting is he recovered, and like a year later they bought. But they bought cash because they got a really big insurance settlement.
Oh, nice.
So, but nonetheless, like those things happen. And it's just the challenge of the real estate mortgage industry sometimes that I think a lot of people don't see that we deal with in the day to day. What about so we talked about loan products. We kind of talked about what's happening with rates and refis, and then kind of some crazy stories. Jumbo loans. There are some unique things I've seen happen in jumbo loans recently that I think again, whether the person is like a very high net worth, or depending on the property that they're buying and how expensive it is, there's some creative things that can happen in jumbo mortgages because the banks, the banks and the mortgage companies see that the person is very high income and it's a very high dollar amount, which means very high compensation. So talk on that a little bit on maybe creative things that you've seen happen when somebody's buying a really expensive house and getting a mortgage.
Well, so for instance, we have doctor's loans that we can offer for, they often buy jumbo. And so doctor's loans, we don't look at their student loans that can sometimes harm,
it can make it can be challenging.
Ratio,
it can be challenging. And then because they've got a practice or they've got equipment,
correct,
and there's things that you look at and say, okay, these kind of offset, right?
Right.
That's cool. And then what about like from a rate perspective, are jumbos competitive to where you're seeing conventional VA, FHA, or is it more expensive, less expensive? Where do rates come at with jumbo typically?
Actually, they are great rates. They're actually comparable to conventional.
Okay, cool.
Mm-hmm.
Yeah. So sometimes people might think like, oh, I'm going to buy a $3 or $4 million house. I'm not going to qualify for the same kind of rate, but it's really not true.
It's not
right. True. Yeah. So again, you're listening to the Duncan Duo Real Estate Show when we aren't on air at the Duncan Duo, Twitter, Instagram, YouTube, TikTok, Facebook, always putting out relevant real estate information. And if you've got mortgage questions for Melissa, we obviously can always answer your real estate questions, but if you've got mortgage questions, maybe a scenario you want to run by, maybe a second opinion, maybe you're qualifying right now and you're concerned that maybe you're overpaying or your rate's too high, you can hit her up at 813-735-9395. Again, that's 813-735-9395. And we'll be back wrapping up our last segment after a quick break here on WFLA News. We're back here on the Duncan Duo Show. Andrew Duncan with the Duncan Duo team, LPT Realty, Melissa Rodriguez with Citywide Home Mortgage, our preferred exclusive mortgage lender on the Duncan Duo team. And we're going to talk about credit for a minute because this is something I think a lot of people have misconceptions about. And we see it happen all the time where someone believes their credit's fine and they go to qualify and they find out there's an issue. They go to buy a house and they've already looked at the house. They're already in love with the house. They're ready to go. And then, guess what? There's a problem. So I know I'm an advocate for, and I know you are too, before you look at houses, get with a mortgage person, get your credit squared away.
Well, just because you look at your Credit Karma and it says 700, it doesn't mean that when I pull your credit, it's going to be 700.
Correct.
So for sure, always, we can start off with a soft pull if you'd like. But yes, you have to, instead of going out and falling in love with a property, before even getting pre-approved, always get pre-approved first, because the last thing you want is to say, oops, it's not a 700, it's
hey,
a
honey,
600.
we can't buy this one now. Like that's the worst.
Happy wife, happy life.
Yeah, we know a lot. Like I've learned one thing I've learned through the years is when there's a husband and wife couple, a lot of times it's the wife that's controlling that part of things. And that's not a fun conversation to say, oh, sorry, we can't buy this one, honey.
Yeah, let's keep her happy.
So do it ahead of time. And I think, again, from a credit perspective, there are a lot of things that can be done to prepare someone. So let's say someone's out there and they know they've got a low credit score. There are things where you guys can look at the credit and say, okay, here's what we can do now, or here's what you need to do in the future to get to a point where you can qualify.
Yes, so that's called a rapid rescore. So what we do is we review the credit, we pull credit, review it, and if we need to bump it up a little bit, then we do the rapid rescore, and it literally tells us, hey, you need to either pay this completely off or pay it down, and your score will go up to this number. So instead of, a lot of people think, oh, I'm going to pay off all of my credit cards. Well, you may not have to.
Yeah. I think the other thing is, if you have mistakes, right, or collections that were mistakes, or things are on there, you dispute them. Right there, you can dispute them through all the credit bureaus. There's an easy process to do that. You can do it online. Some people advocate. I've seen even stuff online where they advocate doing it via certified mail, so that you have like a record that you 100% disputed it. But there are ways where you can look at things and say, look, that's not accurate, or that's not the right amount. There's template letters. AI can help you with a lot of it amazingly today with Grok and ChatGPT. You can literally say, write a dispute letter for this amount that they say I owe and I don't know that much. And sometimes that can be successful because they don't respond in time, or it's a dollar amount and they're not going to mess with it, or it's been long enough of a period of time that they know they're probably not going to collect. So there's ways that you can also dispute some things on your credit report to remove them. But I think a lot of people make the mistake too of paying things like that they shouldn't pay. Like, for example, we've had clients and even with you, for example, where they'd had a collection and it was like, no, you shouldn't pay that. Let's work another angle for that. So sometimes people would think, oh, let me just pay all these collections off. And that could be a mistake too.
Right. So like I said, even with the credit cards or collections, or don't spend your money when you don't know 100% if you need to spend that money. So Let me look at it. Let me do a rapid rescore and see, where do we need that credit score to be, and what is the dollar amount that needs to be used for that.
Yeah. And I think, again, people make that mistake far too often. Even I had an agent not long ago make that mistake themselves, buying a personal property like 2 years ago, and they were like, oh, I have this stuff that my husband did and it's still on here, and we went ahead and paid it. It's like, oh, maybe you shouldn't have.
And when you pay and close, that hurts you even more. So do not close anything, because that helps your credit history.
Right. You pay a credit card and then close it. Like, a lot of people close their credit cards. Like, we had one not long ago where somebody only had like 2 credit cards, and one of them they'd had for like 20 years. And they finally were like, oh, I'm so excited. Dave Ramsey told me to pay it off and close it. I paid it off and closed it. Well, guess what? You got no credit now. You can't qualify.
Right.
So see if Dave will give you a credit card. He won't, because he doesn't believe in credit cards. But nonetheless, like that's a mistake a lot of people make. So don't expect that you can become the credit expert. Again, AI is great for a lot of things, but somebody that's been in the trenches and has the experience on the mortgage side can help you understand that. So if you've got credit issues, you need some help on that stuff. Stronger credit score basically means lower costs, lower interest rates, lower payments, lower things across the board. So if there's things that you can do during the mortgage process to improve your credit score, it isn't just going to help you on your mortgage. It's going to help you in a lot of other areas too. So, definitely something that a lot of people misunderstand is that is something that's available, that can be done, that can improve their ability to qualify. It's just they've got to be proactive, and it's going to take some extra effort, like whether it's disputing stuff, whether it's, like you said, whether it's the going through the process of having a credit pulled and the rapid rescore. There's some things that someone's going to have to do, a little bit differently before they start the process of looking at homes, if their score has some issues.
That's correct. And if you have, let's say, student loans, we add a zero if they're deferred and a zero payment. The lender has to put a payment in there. So it depends on if you're going FHA or conventional. But let us look at that, because don't start, like you said, don't be a professional. Let the professionals just look at it, just so that you're secured and you have a true pre-approval in hand.
That brings me up another thing, especially on the deferred. If you go out and get furniture at 0% interest, I don't have any payments on it. Yeah, you do.
Right.
Because during that mortgage term of 30 years, you're going to have to pay that off, or you're going to have to make payments. They're going to have to calculate a payment for that. Even if your payment isn't for a year. I got 0% for 12 months.
Right.
I don't have a payment. I can afford it.
I'm going to put one in there.
You're getting your payments going in there. So anyway, well, it's been awesome having you on, Melissa. This will not be the last time Melissa comes on talking mortgages on the show. Again, you can call her for mortgage questions, 813-735-9395. Again, 735-9395, and hit us up on all of our socials at The Duncan Duo, and have an awesome Labor Day weekend, Tampa Bay.
Thank you.